Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, May 23rd, 2024. It's 4:15 Eastern Time on Thursdays. We're closed, and I'm pretty much videoed out today. I'm sure you guys are. I only did two, but they were fairly lengthy. I had to share this. I was gonna get some static charts out, screenshots out to you. Then there's too many. It's a lot quicker to do it this way. So it'll be a brief video. I'm gonna share something I've never seen before, and not to say it hasn't happened before. I'm sure it's happened to some extent or another. I've just never looked for it. And what that is, if you recall in the video earlier today, I talked about the reversal we had in the market, the big Nvidia giddiness pop in the open, which got faded and faded pretty good throughout the day to close all the indexes red. And so what I was highlighting in the video is that we had, should we close down around where we were, which we did, we would have bearish engulfing candles on QQQ and SPY. And that's what happened. Now let me just go over this. You can look these up. And I encourage you to anytime people are throwing out terms. A bearish engulfing candle is you have bullish or bearish engulfings, and bullish engulfing candles you only want to look for at the bottom of an extended trend. Sometimes you can get an engulfing candle in the middle of a trend. It doesn't mean much. So you want to look either after an extended uptrend, which I think it's safe to say this is, or at the after an extended downtrend, which I think it's safe to say this was. So not by mere coincidence, and I highlighted at the time, if you zoom in there, look back on when the market bottomed, the bottom on October 13th, 2022, you had big, massive bullish engulfing candles. And so what the candle needs to do, it has to engulf the body of the previous candle. So not the entire candle. By definition, a bearish or a bullish engulfing will, of course, a bullish engulfing is green, and you close above there. And it engulfs the body, which is the fat part, which is essentially the open and the close. The skinny part or your shadows are the high and low for the day. And so that did prove to be a reliable one. You want to see those gains get built on. And let me say this, and I've said it before. Okay, the success rate, it's not 100%. Nothing is in trading. Again, if there was any 100% indicator or anything, we'd all be rich. You just set back, set your computer, get some algo to trade for you, and then go buy whatever you want to buy in your own country, whatever, because you just keep making money. So, however, it is fairly reliable. And again, it's when you look for it. You want to look for it after an extended uptrend or downtrend. After a downtrend, obviously you're looking for a bottom, so a bullish engulfing. And then from that point, here's the thing about it, and I always say this, throw shots out a lot. And, I always say you miss 100% of the shots never taken. That's a well-known saying. And, you're not going to get them all. But the thing about trades, some have a better risk reward profile than others. So when you have a bullish engulfing or a bearish engulfing, which we have today, and I'm going to show you again something that's I haven't gotten to what I've never seen before. I'm about to show you, but it's easy. It's very easy. You take a shot if there's evidence, and there was. You go back on the site. We had positive bullish divergence. There were all reasons to go long there. You go long with a stop below it, because if any violation the next day or thereafter of that candle, it negates it. And I have actually in recent months we had bearish engulfings on the video. We had a couple and they didn't pan out. We're a little bit above those, but again, so I'm showing you just that they're not 100% effective, but they are pretty darn effective. And even then, so if you take in the fair reliability performance of them, couple that with the RR. Again, if you take a shot at it, like today, for example, you short today, I highlighted the bearish engulfings earlier in the day, so you could have waited till close to the close, say, yep, we're going to get it. The market certainly going to close below the body of that candle. And then, so what is your downside? Let's just say you waited to the end of the day and you shorted the low today. The high to that candle is 1.5%. So you give yourself a 2% stop loss. I don't know. Some people seem to be a little more sensitive to losses than others. 2%, that's daily noise. Most, if you're swing trading QQQ, and again, important here, if you're trading this as a potential topping stick, let's just say for kicks and giggles, you're just going to go for my targets down here, T3, T4, T5. Right now, let's just say T3. So now you're risking 2% to make 12. That is a 6-to-1 RR. It doesn't get much better than that. So even if you say, well, Randy, you keep shorting these marginal highs and then we go down and then we go up. Again, 6-to-1 RR, even if you acknowledge, because it's a counter trend trade, meaning the current trend right now is up. So therefore that has to give you a less favorable odd just by nature anytime you take in a counter trend trade. So, but then that is offset. So that lower probability of success is offset by that very good RR, risk reward ratio. Again, you're risking 2% to make 12 or more. If it's top and we hit the longer term target, we get down here, I'm going to start talking. I promise you, if and as we approach these targets, I will start to then revisit my longer term bear market targets on the weekly. Right now, first things first. And look, tomorrow we take that candle out. Guess what? You'll never hear another peep about it. It just means it didn't play out, and that's it. And no big deal. Move on. I'll look for the next setup. So let me get to a couple other things. So that's it. So we had on both QQQ and SPY, the S&P 500, again, it's highlighted in the early videos, clear and solid bearish engulfing candles. In fact, look what the SPY did. It wiped out. It wiped out not just one, it engulfed the previous 1, 2, 3, 4, 5, 6 trading sessions. All the more bearish we can wipe that out, because that means all these folks here that bought in the last few days in anticipation of video for whatever reason, they're underwater. Not by a lot, but they're underwater. Okay, and so again, just let's read up on it. It's a simple thing, and again, the simple strategies: take it or don't take it. But you're very limited to your loss, because if any move above there, by definition, it's no longer a potential topping stick. I mean, it doesn't mean they can't do that, and then the top comes after, but it won't be the top. So today has the potential to be the top, and I'll continue to point that out 100 times over in the next, as long as I live and as long as I do this, when the time is right, when the conditions are right. I wouldn't be harping on them right now if we didn't have negative divergence across the board from the 60-minute chart all the way out to the weekly and even the monthly charts. Okay, so there it is, SPY and QQQ, but there's more. So let's go back in time a little bit further. I just showed you on both. It was both SPY and QQQ that had bullish engulfings back on that same day, October 13th, and that was the bottom. So that's safe to say that was a pretty reliable indicator there. Now let's go back a bit further here. Let's zoom back in time to the last bear market top. Whether you want to say it's the same bear market we're in now or a new one, doesn't matter. What I can tell you, and I did highlight back at that time, we had, you got it, guys, and zoom in tight, and let's go a little tighter so you can see in the video. Bearish engulfing candles mark the top in the Nasdaq 100, and that's the big one to me. That's the more important, because it's the stocks everybody loves. The S&P is grandma's index. Got a lot of blue chip dividend payers, utilities, healthcare stocks, things that don't exist in the Nasdaq 100. This is your growth index. This is the same stocks, but to a much larger weighting. A lot of them are in the S&P, so you can figure out where the Qs are going. You know where the market's going. This is your growth index, and again, but the drivers of the U.S. stock market. And so that was it. January 21st was the top back then in the Nasdaq 100, and we had sell signals, so it wasn't just that. Although that was highlighted, and same thing. We went down. We never took out that candle. They tried to come close, but not close enough. There was the top, and so that's it. So I just want to show you the reliability. And again, to summarize, the two biggest turns in the market that we've had in many years, right here, signaled this whole bear market, which was identified or came with, whatever you want to call it, bearish engulfing at the bottom, and now we have another bearish engulfing at the top. Okay, so what's different this time besides those? Well, number one, again, we have them on both the SPY and QQQ, which is nice to see. But remember, and so in the video, after the video, I took a look, and I was going over some charts today after the close. That's why I'm doing this video now. And I noticed that it wasn't just the indexes. Normally, you're usually going to get a few others. I noted the horrible market breadth earlier, how the vast majority of stocks in the S&P and Nasdaq 100 were down. and I've been talking about the narrowing breadth. So here's what I did. I put up a new indicator here. This is components of all the Nasdaq 100 stocks. And so what I sorted it by, I added a column to show stocks that made a new high today. And so in the Nasdaq 100, I'll click right here. It tells me 17, you can't see it in the video, it says 17 of 100 stocks made a new high, new all-time high today, all right? And you have that, of course, we all know about NVIDIA. I'm going to go through these real quick, and I'm going to show you what stands out. So again, it's these check marks. I'm going to cover these 17 stocks. I'm going to do it fairly quick, and we'll wrap the video up. So NVIDIA, new high, nothing there. There's a gap up. It is a divergent high, but remember, divergence isn't a sell signal. Although, I told you today personally, right there at 12% up, shorted. So whatever, I'm, that add-on lot down to, I'm net down on the position. But like I said earlier, I think if I'm right on where the market's going, they're going to drag NVIDIA down, kicking and screaming with it. All right, let's look at the rest here. So there's NVIDIA. Number 2 is Intuit. They're the makers of TurboTax, Quicken software company, another company. And again, so what I'm showing you right now is I didn't sort by stocks that made a bearish engulfing candle. I sorted by the stocks, the only 17 out of 100 made a new high today in the NASDAQ. Almost all of them put in a divergent high and a bearish engulfing candle, and after an extended uptrend where you want to look for it. So there's Intuit, negative divergence, PPO hasn't crossed over yet, but starting to curl down. But nice fat bearish engulfing candle, engulfed the previous 2 candles right there. And so same story. And, if it didn't have the divergence, so I couldn't make the case based on that, I'd say it's a random bearish engulfing. If you look hard enough, you'll find bullish and bearish within a trend, but you just ignore those. So there's number 2. I'm sorry, 2 out of so far, the 1 out of the 2. I'm going in order here, just how they're sorted. VRTX. Now, also I'm going to say this, as I go through these, pay attention to what sectors you're in. Tech to me is the biggest thing. Nobody's going to argue with me or anybody that this market's not all about tech and AI. That's what's been driving it. Those are the biggest gainers by far. They've skewed the indexes and pulled them up to new highs. If you look at any, strip out or use the equal weighteds, you're not at new highs. And you go to those indexes that don't have such a high tech weighting, you won't see new highs there, such as small caps, things like that. Vertex is a biotech company, and it's up. I can't take anything away from it. No bearish engulfing candle, but it did put in a divergent high. And again, this is biotech. I was listening to a news feed earlier, but it was only in one ear and out the other. I heard something about vaccine stocks, and I don't know. I imagine Vertex is probably in on that. I don't know what their business model is or their pipeline kind of drugs. So I'm not going to spend too much time on it, but there's some more. So what I'm getting at, focus mainly on tech as I go through these tech and semis. Let's do that. So the next up I have is Qualcomm, QCOM. New high today, clear bearish engulfing candle, negative divergence right there. So far that's of the tech stocks, if you count Intuit, because it is, software. Here's PDD Holdings. No high. I'm just trying to cover them all for you, but no bearish engulfing, I'm sorry, but a new high. It's got negative divergence right here. No sell signals or anything. And I'm not really, my goal here is to kind of just show you them all that made new highs and what they look like. So all these that have made new highs, and again, I always say it's not as if these divergences don't work. They don't always pan out, but more often than not, they do. There was a last divergent high in this one, and that was well into a double-digit drop. We went from about 150, 160 all the way down to 110. Now we have the same thing, just bigger. It's the same divergence on this marginal, ever so slightly new high. There's a trend line. So if we dropped 50, 40%, whatever it was back then, 30%, I would expect as big or a bigger drop. And there's one that went and already checked its 200s a couple times. And that's that. So let me go a few more. Costco. Costco is one of the top components of the Nasdaq 100. It's up there. It's like number 10 in that range. Costco also put in a divergent high, as you can see, and a bearish engulfing candlestick as well. So that's quite a few here. Moderna that's definitely a vaccine stock. We know Moderna from the COVID pandemic. So doesn't really move the needle. It's only a 60, where's the market cap? $62 billion company, versus, these big techs that are, $1 trillion club. $2-3 trillion on big techs. So, and it's at resistance, by the way. So I don't have much of an opinion on it. I will say if it reverses off this resistance, which I bet it would, it's good resistance. It's a hell of a run into it. Probably get a pullback here. But either way, it's one of the ones making new highs. But again, it's nothing to do with the tech sector, and it's not really going to move the needle on the indexes. KLAC is a big one because this is not only a tech company, it is a semiconductor equipment maker. So these are the companies, KLC and AMAT. They're the ones that make them the equipment that makes semiconductors. So they're the first. You want to keep an eye on them. If the semis, I always say, are the canary in the coal mine for the tech sector, then these chip equipment makers are the canary in the coal mine for the chip sector. So nice fat. You can see clean up trend line in which to trigger short entry if you're so inclined. Negative divergence there, and bearish engulfing candle on KLAC. Micron, another big chip. That's a semiconductor company, not a maker, but a chip company. You all know Micron. Bearish engulfing candle there, engulfed the body of the previous one. And other than that one, wiped out quite a bit here. So again, it's this common theme here. They're punching almost even those without the bearish engulfing candles, all these tech companies. Those that don't have a bearish engulfing and have made it to a new high today, it's a very slight marginal new high with some clean negative divergences. So yeah, I'm telling you, this is pretty good stuff. Again, if it follows through, we'll know tomorrow. And then maybe, remember, the markets are closed Monday. I'm going to be working next week. I'm going to be out of town, most likely, depending. I have a relative I'm going to take care of out of surgery on the other coast, but I'll be working from my from there, from that house. And I'll continue to update you. I wanted to let you know Monday the markets are closed, so I'm not going to be posting anything on Monday. In fact, that's probably when I'm going to be going over to Miami. So bearish engulfing candle on Micron, and nice little pattern there too. So call it a setup, guys. When I do these, I'm providing analysis, but they're also trade setups if you're inclined to take it. That's a minimum target right there, 106.63. All right, couple more. We're a little over halfway done. CEG, Constellation Energy. Now, this is obviously not a tech company. Obviously not going to move the needle. It's only a $69-70 billion company, so doesn't have the weighting the others do. And it's also in the energy sector. This is what Powell and company in the stock market doesn't want to see going up, are energy companies. However, with that being said, it's in a beautiful bearish rising wedge pattern with negative divergence. And again, it's one of the ones that made a new high. No bearish engulfing, but again, doesn't matter to me because it's not going to really move the needle. It's utility company. Oh yeah, utilities. That's right. Utilities have been running up on the AI hype. Like, it's crazy, everything, because all the increased energy demand, because we're going to be running so much, so many chips are going to be running on AI, and they have, huge power demand. ADI next, analog devices, semiconductor. No bearish engulfing, but divergent high. You got equal highs on the RSI, equal to slightly lower. If we turn down that line, that blue line will actually go down the PPO line if it goes down tomorrow. But again, just showing you them all. So at a new high, divergent high, it reversed off the highs today. Nothing more. I wouldn't. There's better fish to fry than this one. CTAS, Cintas. Business services company, divergent high and bearish engulfing candle. So here's the thing: the majority, almost nearly every single one, except what I think that mRNA Moderna had a marginal new and divergent high, negative divergence, and the majority of these have. Again, the ones making new highs today in the Nasdaq all put in these bearish engulfings. And again, I haven't seen that in a while. Now, there was one the other day in this stock right there. There's an example, but it's also pretty much right there. You would have, not that I highlighted this or shorted it back then, but I'm highlighting the fact we have a bearish today. So it's the same setup on all these, or simply the market. Again, we can pop tomorrow. We can pop on Tuesday when the markets open back up. But it's like I said, the downside is very limited if you have a short with a stop above today's highs. MCHP, microchip technology, another semi, another new high today, another bearish engulfing candle and divergent high. So that's it, guys. It's a pretty, we're almost done. Microsoft. Now this one counts. This one moves the needle. We had a divergent high back here. I mentioned that. We were short the Qs. Went down when QQQ hit T2, the second target. That's when we reversed. We bounced as expected, and so did Microsoft as expected. Wasn't sure, didn't think it would carry up to new highs, but it did, and it's just simply a ever so slight, barely marginal new high, but with a bearish engulfing candle and closing right on uptrend line support. If I can grab that trend line, tweak it right there. Yeah, that's how it should look right there. So again, simple stuff. Now, if you want to wait, you can wait for a breakdown of that. That's going to help. Microsoft, again, has a tremendous weighting on the Nasdaq 100, being one of the top components, and will certainly pressure the index if this breaks down. So bearish engulfing candle, simple strategy. Short will stop above the highs, and that's it. Sooner or later, one of these will prove to be the one. We haven't had another one that I see here in Microsoft. That's the first bearish engulfing. That one was about equal right there. Three more, I think. VRSK, Verisec Analytics, bearish engulfing candle. This is again also a one of the Nasdaq 100 components making a new high today, and you would actually either take that across. That's your divergence, all that, that way, and you have the PPO is rolling over, poised to make a bearish crossover. Though that's another indicator that you're most likely getting a trend reversal. That was our last bearish PPO crossover there. The stock fell, and that's all measured for you just to kind of give you an idea. These are swing trading tools. 13%, and I look for the high level. I don't look for them in here when you're trading in a sloppy range, sideways range. I look for high level, meaning well above the zero line, like this one, this one, this one. And that one you didn't have any divergence, so that's that one. This one you have divergence, and it will confirm the divergence. That one you had divergence, and it gave you that drop there. So boom, boom, boom. That's another one. Looks like a good short. Where to? If you want to short that one, right here. There'll be a first stop along the way, about right here, 231.23, and then it goes down to about 217 right there. And if so, let's just talk. Trading plan. It's after hours. You can still plenty of time to short it, or tomorrow if you're still below there, as long as you don't take out the high. So you short, just say right here, wherever it's trading. I have my after hours trades turned off. That gives you 13% downside to about a 2% stop loss if it takes out the highs. Excellent. You can even give yourself a little room if you want to. This market's just been, it's just the algos and the way they program now. They know where the stops are and how to get traders. So give yourself a little room on these, especially, again, you use a 4% stop and you still have better than a 3-to-1 RR. Excellent. AZN, AstraZeneca, got some divergence here, bearish engulfing candle. So you get the point, guys. And there's one more, AMAT, which is the other big chip equipment maker, along with KLAC, who I already highlighted, divergent high and bearish engulfing candles. So again, not saying that's never happened, but because I've never really checked this way. But like I said, since I saw the bearish engulfings on both SPY and QQQ, and then as I was going through the components, it prompted me. I was seeing a lot of that. I'm like, ooh, there's a lot of technical evidence of a potential top today. And so do with it what you want. We'll know tomorrow. And like I said, if we just, tomorrow they just blast on through here and close on up, then that's it. And it was a shot never taken. Minimal losses. Or... and one way to do it too, if you're saying, okay, you know what, Randy, I'm going to take a shot here. And again, I'm not telling you what to do. I'm providing you analysis, things that I'm seeing that others might not see or you might not have seen, and then let you decide what to do. I'm going to put a line right here because this to me was the highs right here. We're trading in this trading range right here. And we had a breakout. So a couple things are going to happen if we move down on this stock. And this applies to almost everything I just covered as well, but because the charts look very similar. We break down back under that 214-ish level right there. three things happen. Three things. Number one, let me tighten this line up. Number one, we break this well-defined uptrend line right here. That's the sell signal in itself. Number two, we break back down below that 214.63, which was the top of this trading range, which gives this a breakout. That's the breakout to new highs. It was resistance, resistance, resistance. Stock couldn't get through it, just like kind of like the Nasdaq 100, pop to new highs, and if it fails, that's a failed breakout. I often say fewer things in trading and investing are more bearish than a failed breakout. And the reason behind it, and at least my logic, again, it's from my observation over the years that it's very bearish. But the logic behind it is longs pile in, they buy breakouts to new highs, and short sellers get squeezed out. And then that paves the way for a pretty good drop. And then so that's two things. So number one, a failure of the breakout. Number two, a break of the trend line. And number three, if it happens, tomorrow or Tuesday, as long as we remain below there, it's going to give us confirmation that that was a bearish engulfing candle. And again, no guarantees that you can't turn around then and go up, but it just increases the odds. You want to ideally see follow through selling. At the very least, you don't want to violate or pop the top of that candle. So that's it. So there's a lot in the charts. That's every single company right there, all 17 that just made a new high today. Remember the vast number were down when I showed you my real-time breadth indicator for the Nasdaq 100. You do it this way. I'll stretch it out so you can see it in the video here. Stretch this out. So I sorted these are the number of stocks up. So you click on the last one, which was Lululemon here. At the bottom, it tells me 18. 18 out of 100 stocks went up today in the Nasdaq 100, which means 82 stocks out of 100 went down today. Pretty, on a day that the king of everything, AI and everything, stock market had to blow out earnings, and so it could be a one-day wonder. Like I said, we don't know, but you never know. You can, like I said, I'm not a purely mechanical trader, but at times I am. Sometimes you don't overthink these things. If you see a bearish engulfing candle and you think a top is coming soon, and you can support that case with the way I have with divergences, breadth deterioration, and other things, then you take a shot, and it either works out or it doesn't. And then that's it. And you wait for the next setup. All right, guys, I'm going to wrap it up here and get it out to you. And this will be the last video of the day. We'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a good one.